Welcome to Journey Realty Group. If you're interested in real estate, you've probably heard the term inflation thrown around, but what does it really mean for home prices, mortgage rates, and the overall housing market? Today, we're breaking it all down in a way that's easy to understand, whether you're a first-time home buyer, an investor, or just someone curious about how the economy affects real estate. By the end of this video, you'll have a clear grasp of how inflation influences property values, what that means for buyers and sellers, and some strategies to navigate the market during inflationary periods. Let's dive in. What is inflation and why does it matter? At its core, inflation is the rate at which the general level of prices for goods and services rises, eroding the purchasing power of money. In simpler terms, it means that over time you need more money to buy the same things. For example, imagine you could buy a loaf of bread for $1 20 years ago. Today, that same loaf might cost $3. That's inflation at work. It doesn't just affect groceries, it impacts everything, including housing. The Federal Reserve, or the Fed, plays a crucial role in managing inflation by adjusting interest rates. When inflation is high, the Fed raises interest rates to slow spending and borrowing. When inflation is low, they lower rates to encourage economic growth. And since real estate is largely dependent on borrowing, these rate changes directly impact home prices and affordability. The relationship between inflation and real estate prices. So, how exactly does inflation affect home prices? The connection isn't always straightforward, but here are three major ways. 1. Higher construction costs. Inflation increases the cost of raw materials like lumber, steel, and concrete. Labor costs also rise, making it more expensive for developers to build homes. When it costs more to construct new houses, home prices naturally increase because builders pass those costs on to buyers. 2. Increased home values. Real estate is often seen as a hedge against inflation. As the cost of living rises, property values tend to follow because real estate is a tangible asset that appreciates over time. If inflation is high, home prices generally go up, making it more expensive for new buyers to enter the market. 3. Rising mortgage rates. To combat inflation, the Fed raises interest rates. This makes borrowing more expensive, which can slow down demand for homes. When mortgage rates rise, monthly payments increase, pricing some buyers out of the market and potentially cooling home price growth. Let's take an example. If you were looking at a $300,000 home with a 3% mortgage rate, your monthly principal and interest payment would be about $265. But if the rate jumps to 6%, that same house now costs around $799 per month in payments, over $500 more. This makes homes less affordable, reducing demand and, in some cases, slowing price increases. How inflation affects home buyers and sellers. Whether you're buying or selling, inflation plays a major role in your decision-making process. For home buyers, higher home prices and mortgage rates mean increased monthly payments. If inflation continues, waiting might make homes even more expensive. Consider locking in a fixed-rate mortgage to avoid rising interest rates. For sellers, if inflation is pushing prices higher, you might sell for more than expected. However, rising mortgage rates could shrink the pool of qualified buyers. Pricing your home competitively becomes even more important. One trend we've seen in high inflation periods is a slower market. Fewer buyers can afford homes, leading to longer sales timelines. But on the flip side, in markets where demand remains strong, such as cities with job growth, home prices can continue to rise despite higher borrowing costs. Inflation and rent prices. Inflation doesn't just affect home prices, it also impacts renters. As property values go up, landlords increase rent to cover higher costs, including property taxes, maintenance, and insurance. This puts pressure on renters who may find it harder to save for a down payment on a home. For example, in cities like New York, Los Angeles, or Miami, where inflation is high, rent prices have surged, making home ownership seem even more out of reach for many people. However, in some markets with an oversupply of rental properties, landlords may have to offer incentives to attract tenants. If you're renting and considering home ownership, paying attention to inflation trends can help you decide whether it's a good time to buy or if you should continue renting and saving, investing and navigating the market during inflation. real estate investment strategies during inflation. Many investors turn to real estate as a hedge against inflation because property values tend to appreciate over time. But how can you make smart moves during an inflationary period? Buy and hold strategy. Owning rental properties can be a great way to generate steady cash flow. And as rents increase with inflation, landlords benefit from higher income while their fixed mortgage payments stay the same. Invest in multifamily properties. More people renting instead of buying means multifamily units, apartments, duplexes, etc. often become more profitable. Look for markets with strong job growth. Areas with a booming job market and population growth tend to see continued housing demand even when inflation is high. For instance, cities like Austin, Texas, and Nashville, Tennessee have remained hot real estate markets despite rising inflation because of strong economic growth and demand for housing. Final thoughts. How to navigate an inflationary housing market. Inflation is a powerful force that shapes the real estate market in multiple ways. It drives up home prices, affects mortgage rates, impacts rental costs, and changes how both buyers and sellers approach the market. But despite its challenges, understanding inflation's effects can help you make informed decisions. If you're looking to buy, consider acting sooner rather than later to lock in a favorable mortgage rate before they increase further. If you're selling, recognize that while your home may appreciate in value, higher mortgage rates could limit the number of potential buyers. And if you're an investor, inflation can create new opportunities, especially in rental markets and long-term property appreciation. The key takeaway? Real estate remains one of the best ways to hedge against inflation, but timing and strategy are everything. Staying informed, planning ahead, and adapting to market conditions will put you in the best position to succeed. Join the conversation. Now, we'd love to hear from you. Have you personally felt the impact of inflation in your local real estate market? Are you seeing rising home prices, higher rent, or increasing mortgage rates? Drop a comment below and share your thoughts. If you found this video helpful, don't forget to like, subscribe, and hit that notification bell so you never miss an update from Journey Realty Group. We're here to help you navigate the world of real estate with confidence. Thanks for watching, and see you in the next video.